Welcome to the Foundery, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Each week, we explore how entrepreneurship, leadership, and mindset play into success in the commercial real estate space. Today, we welcome Ellis Hammond, founder of Symphony Capital Group. Thanks for coming on the show, Ellis.
Man, I'm pumped to be here, dude. I'm excited to speak. I love speaking to entrepreneurs, by the way. Like it's one of my favorite things to do because it's my story. It's my journey. I was a pastor and now I'm an entrepreneur, but it's funny, like intrinsically, I think I've always been an entrepreneur. I've loved to build things, and it's, one of the hardest professions in the world, man, to be an entrepreneur. And so if I can give encouragement, if my story can help others, let's do it.
All right, awesome. I thought for a moment you were going to say that being a pastor was the hardest job in the world, because I would believe that as well.
Not easy, but no, I think entrepreneurship is harder.
Okay, awesome. Well, you know what? I wasn't sure how I was going to kick this off, but I want to say that you gave me some of my favorite advice in real estate. You said, don't invite me to one of those 30-minute introductory calls. Have me on your podcast. And, ever since then, I feel like I've had a whole lot of clarity. I've really focused on doing just that, focused on this podcast, and met a lot of amazing people. And I still have those 30-minute introductory calls. But you know what? I find that I learn a lot more about a person in a 30 to 45-minute conversation like this.
Yeah. And dude, I mean, it's just such a great, I don't have time for 30-minute phone calls. I just really don't, because most busy entrepreneurs don't. I mean, it's just, and unless especially if you're not going to be a client or a partner in something and there's not real clarity to that, at least a podcast maybe could help us determine if we could be a partner in something. And if not, then at least I still get to talk about my company on your show, right? So it's like, I think if anyone who's listening, and I mean, this has been how we've grown our network to be able to purchase over $100 million of real estate, to have the #1 faith-based mastermind in the country, is because I had a podcast show and my sole focus was build relationships, build relationships, build relationships, build relationships. And the way you build relationships is you add value. You create more value for the person you're interviewing than they bring to you. And so I love the platform you're building, dude, with the Foundery, and allowing me to come in here and just, share my story and share value to your audience. And again, you promoting that to your audience is a very beneficial trade-off.
Yeah, that is super amazing. And I knew we were going to get to Kingdom Rei. So that is your faith-based let me back up for a second. That is your faith-based mastermind. Tell us more about Kingdom Rei.
Yeah, Kingdom Rei, I was a pastor. It's my story. It is what it is. And I was, I did my, he's got into real estate just because, for several reasons, but one, we needed a better way to build and create wealth. And I think as I did my first deal and I did my second deal, I realized, this is the area in which I really feel like God's calling me into, is the world of entrepreneurship. I kind of knew very quickly I didn't want to stay vocationally as a full-time pastor. However, my faith was still a core and is a central piece to who I am. And so as I got into this world of real estate and entrepreneurship, I began to see that the circles were very separate. Like, there was my entrepreneurship, kind of ambitious, success-driven community, and then there was my faith community. And I always felt like those things, not that I was being different in them, but like it was hard to see those two worlds come together. And so I guess being an entrepreneur that I just saw a need, that I knew there had to be other people like me who were ambitious, who wanted to grow a real estate portfolio, who are thinking big and have big visions and big dreams, and yet love the Lord. And don't want those things to, either one of those things, to be sacrificed. And so I think a lot of people, especially if you're a person of faith, it's probably hard for you to go to your Bible study or small group or whatever and talk about the biggest, the big deal that you're trying to close or whatever, because what's everybody else doing? You know what I'm saying? Like, probably not that. And so it's just a home and a place, man, where, folks can find a home both in their faith and in their entrepreneurship vision.
Yeah, that's beautiful. And I feel like if your faith is genuine, it should obviously animate everything you do. So amazing that you're bringing people that feel the same way together, and really enjoyed following your story. I've seen you on, let me see, Multifamily Investor Nation. You had a couple of really great, I'm sure you've probably been doing it for a lot longer than that, but I've seen at least the last few that you've been on there. So really
Yeah.
great stuff.
Yeah.
Yeah, and then also you've got your own thought leadership platform. I believe you just launched the future of real estate, and first episode dealing with the metaverse. Why don't you break down your show first, and then if you want to help people understand what can you actually do in the metaverse? I mean, I think of, or many people I would say think of real estate, right? It's indestructible, or at least the earth is, right?
It's a weird time, man. It's a weird time to be alive. It is fascinating time to be alive. So yeah, I did just start a new podcast show. I'm an open minded. I'm just I want to learn, man. I want to be on the forefront of what's happening. And I think as a good investor, as a good entrepreneur, that's a good quality of entrepreneurs, that you're constantly seeking to get better. I'll be honest with you, man. I don't know. I really don't. I'm definitely not the expert in blockchain or metaverse or anything. But what I've learned, in the same way that we've got to where we are today in real estate, is if I put myself in the position of being the least or less knowledgeable or less sophisticated person on a topic, my network will increase rapidly, my knowledge will increase rapidly, and so will my success around that vehicle. And so, we start a podcast show called The Future of Real Estate, where you can come and learn from experts in the metaverse and blockchain and crypto, all of these things that maybe tie into real estate and real estate investing. Because if you don't think real estate's going to be shaped or impacted by the rise of these technologies, crowdfunding is a great example, right? And just the way crowdfunding is going to take place. Owning real estate in the metaverse, NFTs, and how that's going to impact real estate. I think about Gary Vee. That's a great example. He's creating an NFT where you have to own the NFT to be able to attend the restaurant. So, think about that as an investment vehicle. Think about Links DAO. It's a golf community now, where if you own an NFT, which is essentially just a virtual membership card, that gives you access to future golf like they're going to go buy a course, so they've literally raised about $13 million from selling NFTs to create this golf community, which will allow them to purchase a golf course. So, it's just so many cool ways, man, as an entrepreneur, of like what's happening in the world of real estate right now is fascinating, and it's moving so fast. And so our show is kind of committed to talking about those things.
Yeah, I think that's really amazing, because one of the biggest issues with real estate, whether it's a feature or a bug, is a matter of opinion. But the fact that it's illiquid, right? And these NFTs could completely change the landscape. As for me, I kind of like the fact that it's illiquid, because we don't have to watch the price go up 5 or 10% in a day.
Yeah, it is a good point, right? Like, I do like the illiquid aspect of real estate too, in a lot of reasons. But you think about how that also keeps a lot of people from investing. And then it's a good, don't get me wrong, it is nice. But if you had the option for it to be illiquid or liquid, I think most people would choose, hey, I'd like to be able to cash out of this when I was ready or when I wanted to. And so,
Right.
Yeah, 100%. In some ways you could argue, and if you're pitching to investors, right now, if your real estate's illiquid, you want to give them reasons why that's a good thing, because they can't use emotions to sell. But let's be honest, man, everybody rather it be liquid. You'd rather be able to transfer your shares out of that in a moment's notice if you needed the capital.
Right. Well, now you did start with your story. So you were a pastor, you moved into investing, you're helping faith-based investors to invest. So tell us, how did you get, I believe, into the multifamily spaces where you're focusing mainly these days? How did you get in there? And tell us about that journey.
Yeah, so our company, Symphony Capital Group, we are a multifamily investment firm now, focused on acquiring assets across multiple states: San Diego, Kansas City, Dallas, Texas. So those are cities, not states, but you get my point. And yeah, our first deal was a duplex. And I think the biggest thing that I learned buying that first deal, so we bought a duplex and then we bought 144 units, and we haven't looked back since. And the reason we made that change so quickly is because I knew buying the duplex that real estate was the vehicle to build and create wealth in. Like, it is the best vehicle to, just several things. It creates wealth. it protects wealth, and it multiplies wealth, right? So there's all of these, the most important things about how to multiply money real estate can do. You have to protect it. You have to shelter it from taxes. It has to grow. And then it also has to be able to multiply, right? And so real estate allows us to do that, especially large commercial. And a duplex kind of buying single family homes I just saw right away, man, it wasn't scalable for us. Like we were having to do all the work. We only got value based on the market appreciating. And when I learned about kind of the vehicle commercial real estate, where, technically, just so we're clear for those who are listening, the reason anything above 5 units is now a business. And so in the same way you would sell any business, it's based on the income time, times the multiplier, right? So whatever your NOI is times the multiplier gives your value. And so for us, as an entrepreneur, I love that. Like I can manipulate or increase the value of the real estate based on my effort. So if we can go figure out value add strategies to increase the income or decrease the expenses, and therefore our NOI increases, we can sell that asset now at the at the multiplier of the market. And that's so significant. I think so many people think of real estate, oh, so it's real estate, cool, like everything else. Like, no, it's not like everything else, because we can multiply the value of our deals simply by increasing income. So for example, if we, just to do the math on this, and again, if you don't know how to explain this to investors, and I think the reason this is a good exercise, because you have to, maybe you are a multifamily investor, you need to know how to explain this to investors. So if I'm in a market like Dallas, Texas right now, which we just got off a best and final call with the seller. So the market cap there is 4.25. Let's just call it 4.25 and being very conservative. That means you're going to take $5. So let's say we increase rents by $5, which is freaking nothing. And you divide that by the market cap rate, which is 4.25. So divided by 0.0425, that's $117 of value. So my point is, for every $5 that we increase our NOI, we're adding $117 of value. That's massive, when you think about what we can do in commercial real estate. So anyways, man, sorry to get on a tangent, but I love sharing that, especially if we're talking entrepreneurs here, because I think when you break it down like that to investors, the light bulb goes on, like, oh, wow. Okay, now I see how we can multiply money.
Yeah, I love that multiplying effect. And my favorite way to think of it is if you got a 4.25 cap, increase the NOI by 42,500, and boom, that's not 42,500.
Yeah, let's do that. 42,500. So 42,500 divided by 0.0425.
Are you ready to build passive income through investing in multifamily real estate? Take the next step by heading to www.horizonmultifamily.com and click Get Started to schedule a call.
Is now $1 million,
Exactly.
40 grand. By the way, we're going to increase the NOI on this building probably by probably more than 40 grand. I mean, by the time we end up selling it, it'll be several hundred grand, right? So we're talking about several $1 million plus the appreciation that Dallas market will have, which we know is going to appreciate. And so, yeah, we feel really good about buying deals in this market.
And I think that really dovetails with my next question, which is that I know that you care about your tenants, and that's, I think, one of the underpinnings of your investing strategy. Could you give us an example of how just being a good person or a good human being as an investor has helped you in the bottom line?
Well, I'll tell you this, man. We were on this buyer. I'll give you a great example. We were on this call with the seller this morning. And I don't know if we'll win the deal. I think we should, but we may not. But I would say the thing that really, I think, separated us on that call, the broker sitting there interviewing us, and he's asking about all of our numbers, and he's asking to make sure that we can, have enough equity to close the deal. And he wants to know about our debt, and he wants to know about our insurance. Everyone's going to answer that question pretty much the same, right? You got to have enough equity. You got to line up great debt. What are your rent projections, et cetera, et cetera. But the thing that I think really separates us, he says, well, what's your CapEx budget? Like, what are you going to do with the asset? And there was our chance that we got to really tell him why we want to own this deal, because you have a great amenity space that right now is being completely underutilized. And we have an opportunity to connect the residents in this apartment building, that, you know, we want to create a space where people can do baby showers and Bible studies and, you know, the opportunity to connect and meet other people in the community. I mean, this is where people live and spend the majority of their lives. If they live in an apartment community, if they're not at work, they're at their apartment, right? And so don't we feel a calling and responsibility to create a place where that can become a home for somebody? And so I think, dude, to the bottom line with your question is, maybe that would win us the deal, you know, like, because that's sincere. That's not just us, you know, creating some crap to like win the deal. Like, that's what we're going to do if we're awarded this deal, is we're going to make it a better place than it is right now for people to live. That seems reasonable to me. Like, because as my faith impacts the way that I want to own and operate with excellence, that's going to impact the residents. That's going to increase, you know, that's going to decrease our turnover in that building. You know, that's going to help us make money, but maybe it'll win us the deal. So I don't know, dude. I think, you know, we're tempted to, especially as investors, just kind of see things as numbers. And I'm like, you know, that's only half the equation.
Yeah. And that's, I think, another one of your principles is about being unique. I remember you saying once, and I don't think I can repeat in quite the same terms, but a lot of people try to go out into business, you know, just to use the proverbial dark blue business suit, try to offend anybody. And I think you've said something to the effect is, you know, the reason why you're not successful is that you aren't repelling enough people, because you aren't unique. You aren't really out there being yourself. You're trying to be so bland, and you don't give anybody a chance to latch on to anything. So that's obviously not your approach.
I mean, it's not that I wanted people to hate me. I just, like, you know, I just realized, like, if you don't, how do I say this the best way? Yes. I mean, I'll give you a really polar opposite, and I'll talk about me. You can't win an election without 50% of the country hating you anymore. You know what I'm saying? Like, think about that for a minute. You literally cannot win an election without half the country hating you. Because if you try and play the middle ground, you don't have a core conviction base that would really promote you into presidency. And dude, I think entrepreneurship in your business is the same way. Like, not that you want the country to hate you for forever, but my point is, even as you get ready to pitch an offer, like, you have to identify who your core audience is and who you want to form a conviction to work with you. And, you know, in the world of real estate, dude, we can buy a lot of real estate with 1,000 investors. You can buy a lot of real estate with 500 investors, with 200 investors. And so instead of trying to please everyone, why don't you speak specifically to someone and really understand what their needs and concerns and issues are and how you can help overcome them? And the reason what I mean by repel is that, you know, a lot of people may come to me and hear, well, I'm not, you know, I'm not really faith-based or whatever, you know, they kind of turn away from that because I'm open about my faith. I'm like, cool. I mean, that's fine. Go somewhere else. There's plenty of other opportunities for you to invest in. But for those who that's really important to, and they want to see their money not just be multiplied, but really be put to good use, I guarantee I'll win that person. And the other person I'm competing against, their track record and experience won't matter, because I've already won the emotional side of that investor. Does that make sense? And I think that's what I mean by attracting and repelling, is you're going to be more attractive the more you repel, actually.
Yeah, 100%. And in a world of people that don't stand out, obviously you have a huge edge over other people just by being a little bit different.
Yeah.
Okay, I'll go a little further on the faith track there. One of the things I've seen that's worked really well, and I think you mentioned like having a Bible study. We had it was like a Bible day. We had some evangelists come out, and it was pretty amazing, and the residents loved it. So again, you got to be willing to stand out, and, you know, don't be afraid to ruffle a few feathers. If it's not somebody's thing, that's okay. But people really respond to whatever you are, and you put forth in a truly authentic way.
Yeah. Yeah, dude, that's so right on. I mean, there's so many, you know, I mean, you think about any of these communities, I mean, a little bit just goes such a long ways, man. I walk so many deals, and I'm so disappointed at how little care and attention that goes into them. Like, it's just so obvious, like, why people, you know, clearly it's just numbers on a page to many, and it really doesn't take much to kind of, I mean, I live in an apartment. Like, I sold my house because I believe in what I preach, that you shouldn't own a home. You should invest your asset. You should invest your equity in rent. So we rent, and dude, like, so I know what it's like to be a renter. You know, if the trash doesn't get freaking emptied, that's a pain in the butt, and I'm calling somebody. And I don't want to continue to live in a place where they never empty the trash, or they never clean the garden, or, you know, all those things. And so this is my home. This is where I raise my kids. It's not just an apartment to me. And I think as an owner, that's the way I think about the way we own our assets too, is like, this is someone's home, and I'm a steward of that. And I will be called, because of my faith and what I believe, I will be called to answer to the way that I'm a steward of the things that have been entrusted to me. And so I have a much higher responsibility than to just my tenants and to my investors. And so I think that's really key to remember. By the way, so does everybody else, even if you don't believe it. I just, you know, just so we're clear there, but I'm associating that because of my faith.
Awesome. And I love that angle. You're a tenant, and so you probably understand marketing in a way that a lot of apartment owners just plain don't understand. I was a tenant some time ago for a short period of time, and you know, it's a different mindset. And when I go out and I see like, hey, I wonder if my apartments have a lot of visibility to tenants. One of the things I'm doing right now is I want to go out and I want to take a look. We got Facebook ads, we've got all these various things, but you know what? There got to be about how many websites do you think there are that you can find an apartment? There's apartments.com. I can't even name them. I got them all up in different tabs right now. But do you feel it helps you to market your apartment better?
Yeah, I mean, dude, of course. If you go into a place and we have after school programs for your kids, we have, you know, I mean, you just feel it. Like if there's programs in place that people can come and be a part of, I would say not just on the, I mean, yes, so it does help. I would say where it really sticks though, because I would say most tenants, as they come into a building, what's a priority for them is affordable rents, right? Like we're in the market in terms of pricing and amenities. I mean, that's what people really care for. They want affordability and they want amenities, and they just want a clean place. So like that's the most important when you're trying to rent a space. What keeps them there though, dude, is yes, all of those things, but maybe more importantly are the connections that they've made while they've lived there. And the more connections that someone can make inside of your residence, the likelier they are to stay. And I know that to be true because, again, I'm a renter and I've been more likely to renew my lease, not based on how much I like living here, but how much I like the people around me. And the only reason I moved from a place is because it got so bad in terms of management. Like, it doesn't matter who lives here, I have to leave. So yes, I do think it's really key. And again, one of the biggest expenses in multifamily is turnover. And so, you know, if you can reduce your turnover expense, you can make a lot of money in this business.
Yeah, awesome. Well, let's go back to your markets. I see you have some sort of popular markets like Dallas. I think a lot of gurus would tell you, yeah, you know, DFW, invest in Texas, invest in Florida, invest in Tennessee. But I also see some markets that a lot of people wouldn't think of. Now, I think a lot of people outside of California just think of, oh yeah, California is dying, losing population. But that's not really the case. I think there are a lot of places that are growing, like Inland Empire. I know for one, and I want to say there's some places in the North of the state. I know San Diego is just amazing, reputed to be America's finest city. And I've spent some time there. I'd be inclined to agree. It's an amazing place. So can you tell us how you picked, obviously San Diego, that's your backyard. How'd you pick San Diego and KC?
Well, I mean, San Diego, yeah, we live here. We know the market. You know, we found a great asset, and we have a very unique strategy on our building. So we're gonna turn all 20 units into short-term rentals, and we understand the code. You know, we understand the regulations around Airbnbs. So you know, we kind of saw something in a building that most people didn't. Most people were just underwriting it as a long-term building, and you know, we took the chance of turning it to a short-term rental because we understood the laws around Airbnbs here in San Diego and where that was going. So that helped us win that deal. Kansas City, it's, you know, we're one of our partners is from the Midwest, so we know Kansas City, we like Kansas City, and I think writing's on the wall. I mean, dude, there's no doubt the money one of the things we look for, especially if we're going to go into a secondary tertiary market like that, is what is the interest of institutional capital coming into this market. And over the past 5 to 8 years, man, a lot of institutional quality type money has been moving into Midwest, especially Kansas City, because of all that's happening there, right? And so that's one of the things that we look for is, is there larger, bigger money coming into this? Because that's only going to increase and inflate asset prices when we look to exit. And even if they're not going to buy our deal, we're buying pretty kind of Class C type properties. So I don't believe that an institutional buyer is going to come buy a really heavy, or a stabilized distressed asset that we're buying. However, that institutional money will compress cap rates, right? It will inflate asset prices across the board. And those who would traditionally go buy those institutional quality assets will now be forced to come buy something of a less quality type deal, which is maybe what we're buying in a market like Kansas City. So just because the institutional buyer won't necessarily be our end buyer, it will still inflate the market, or a better word might be appreciate the market. I would say there's real value there, right? So.
Can you take us a little deeper into the Kansas City market? How are things going with population growth, housing price growth, and jobs growth?
I mean, freaking phenomenal. I mean, they've experienced positive growth across all of those sectors. To answer your question, the median income, I don't have the numbers in front of me, man, to be able to speak directly to that, but yes, I mean, those are factors we're looking at. You want positive job growth. You want, a good household median income in these areas. And so all of that is definitely growing, especially for the Midwest. And I think that's, you're not going to compare Kansas City to a Dallas because it's not necessarily the case. But from a Midwest environment, you're competing with St. Louis, you're competing with Ohio. And I think in comparison to those markets, Kansas City is very, very strong. I mean, you could almost probably call it kind of the new gateway of, to the West these days, where maybe St. Louis was that in the past. I mean, it's just not the case anymore. I think Kansas City is kind of beginning to overtake that in a lot of ways. They also got a freaking phenomenal football team, Patrick Mahomes, the Kansas City Chiefs. So there's a lot of momentum, happening there. So it's just a fun city to be in, man. We've been there a couple of times now, and I love going there. It's a really fun city. They're doing a really good job of kind of keeping the traditional kind of Kansas City feel, but really kind of bringing in this new wave of architecture and tech, and it's a fun place to be.
So being from the Midwest myself, I'm very fascinated by these markets because I see all the appreciation that's gone on. There are a lot of places in the country that just seem nuts, places that I just don't want to touch. And when I see some of these areas, like maybe Kansas City, or maybe a place like Cincinnati that has lost population since 2000, but has recently been rebounding. These are places that really entice me, look like places that I could move and in the investment space and not maybe suffer some of that likelihood of danger, a lot of that risk that you see elsewhere. Are you consciously trying to balance that risk, or you just believe so strongly in the KC story?
Yeah, I mean, again, dude, I look at who's gonna, like, how are we getting out of this deal? And I'm amazed at some of the asset prices that are happening in Kansas City. I look at California, I mean, this is where that money is now moving from markets like California, like a San Diego, like an LA, and moving to areas like the Midwest. And I mean, that's something we really pay attention to, and I want to see. I mean, I'll give you a great example, man. We own a deal right now in Kansas City. We are likely to get our year 4 projection after 12 months. And you can't underwrite that. You cannot underwrite that. We don't underwrite that. However, when there's such a demand for a product and the supply is so limited, that's where you want to be at. And, if you can still buy a deal, let's say I think we bought that deal for somewhere in a 5 cap. We're going to stabilize it to somewhere between a 7 and 8, and then we can sell it at a 4.5, something under. I mean, we're going to make a lot of money in this deal, man. So, and where else in the country right now are you still able to get a 5 cap? I mean, very, very few places. in a quality market, I mean, right? So to answer your question, that's, we're that kind of supply demand equilibrium is really key for us.
Great. Now let's move back to San Diego. You mentioned that you've got a 20 unit out there and you're going to turn them all into short-term rentals. I know that's a huge topic these days. Obviously, a destination market like San Diego makes
Right.
that a whole lot easier, but that isn't all there is to it. I heard you also mention the local ordinances and such. There's a lot of things you need to do. So you want to walk somebody through, say, I don't know anything about short-term rentals other than that they should be in a destination location. How do you make a determination that this is safe, that the city council isn't going to kill it next month,
Yeah.
and that you can
It's
actually
important,
turn it
man.
into a business prop?
Yeah, well, you can look all this up on the city website and then understand where their kind of ordinances are at, where what bills are being passed. It's important to know. And so, if you don't know, hire a consultant to help you figure that out, kind of but all this is public knowledge. I mean, you should be able to research this, yeah, but you can go find it as well. I mean, know this. The thing about Airbnbs is a great thing in any market though. You're especially a destination market, you're competing with hotel money. Like you're competing with the traditional hotel money. And so it's so important to understand what that environment, what's being promoted, who's kind of in control. And unfortunately, hotels control San Diego. And so, they will for sure crush the Airbnb market in terms of residential, right? It is a crushing defeat. It's already happening. They're going to remove about 8,000 permits here in San Diego. The caveat to what we found was that zoning. So there's an exemption for commercial zoning permits. And so we are buying a building that's that's commercially zoned. And what we'll have to do is essentially take those units offline from residential and re-bring them back online as commercial zoning units. And then therefore we can use Airbnb. So it's a very, specialized knowledge. One of our partners has been developing for the Port of San Diego for about a decade. And so was very familiar with these laws, and that was our advantage. And I think in every real estate transaction, you got to ask, what is your advantage? In that deal, it was that guy. In his deal in Dallas, I'm hoping it's going to be our value add plan and the way what we're going to do with our residences. So what's our advantage in every deal? I think it's different, but I think that's also what makes a great entrepreneur, a great investor is, what's either advantage to you winning the deal or advantage to this strategy working. So those are two really different examples, but hopefully make a good case for what I'm talking about.
Yeah, great. And I think that is an amazing business model for people who are willing to take the time like you have to figure it out, to look at the governmental angle, to understand how it affects your business model. And it affects a lot of things, right? Like your financing, and it also impacts how you're taxed, I believe. Is that true in San Diego?
It's a good question. I'm not sure on the tax thing, how that,
Okay.
I don't know if that was a huge implication for us. I mean, we're gonna still pay a lot in taxes. That's just the reality. But I don't know if if that
Yeah.
gave us any of an edge.
I just happen to know that was the case in Florida. And then, people tell me, well, hey, if you turn one unit over to short-term rental, which was what we were thinking, doing one or two,
Right.
that's hard because, then at least in Florida, I looked up that they're taxed differently. And then a lot of the permanent financing that you might get, they don't really know how to underwrite that.
Right.
And but again, and what is your model? Are you actually running the short-term rental, or are you getting people in that do that?
Yeah, once we start getting more and more units online, we'll hire a third party. I mean, we're kind of doing that in-house right now as
Mhm.
we kind of bring on 1, 2, 3 units, but the goal is to have someone else run that.
Yeah, makes sense. They pay above market rent.
Yeah.
They furnish the place, and hopefully they bring in people who aren't going to wreck it. Um,
Well, that's probably not. I mean, they're going to wreck it regardless. But you have a budget for that, and Airbnb
right.
charge it. You can kind of incorporate that into your fees. I mean, yeah, we're going to make a killing on this. So we're not necessarily worried about that. But also think about kind of we're not just going like it's also who you attract, right? So this is not near a campus. These are going to be kind of more higher end type Airbnb units, and so that will attract a different profile of tenant than kind of your beach side you know, lower cost Airbnb would.
Right. Okay. Well, I think with that, let's move into the lightning round. Now, I haven't showed Ellis these questions, so this is going to be completely extemporaneous. So let's start by telling us something about your real estate markets that most people wouldn't know.
About our real estate markets right now that most people wouldn't know. Well, I would tell you this. I mean, I think most people know how fast Dallas is growing. I would say what most people probably didn't know on this last deal is that, and I think it's so important to notice, we're underwriting, we're using things like CoStar to tell us, where our competition is. Hold on, I gotta sneeze. Okay, I'm back. But because again, we're local to the market, we understand it, we have someone there. Our lease ups, our new lease ups that CoStar would not be able to kind of show us the data, we were actually getting about a $250 bump from what the kind of the competition was showing. And so the reason I share that, man, it's like so key to know your market, be in your market, be talking to the property managers, because it's that advantage that would allow us to increase our offer price by more than $15,000 a door, right? And so, I mean, that was several $1,000,000 that we were able to increase our offer and hopefully get this deal. So know your market, man. Know where things are being, trading and lease ups. It can make all the difference.
Great, Ellis. Give us some advice for your younger self.
How young?
Yeah, just go back as far as you have to go to have some degree of naivete.
Yeah. I mean, I always tell young people, man, because this has changed my life, is don't wait to build your network and start investing in your network when you need it. Like, it's too late. And the most important thing, man, and the thing that's just really helped us, these an entrepreneur is not interested in linear growth. The entrepreneur is interested in exponential growth, and so am I. And apart from God's grace, what has allowed us to experience exponential growth are our relationships. And so spend the money, the time, do whatever it takes, man, to really find quality people who are thinking bigger than you, who are accomplishing great things, and figure out ways to just provide value. It is the secret to life. It is the secret to success. And so I just, probably wasted several years kind of not intentionally putting myself in rooms and environments to grow my network faster.
Great. What is the best real estate advice that you've ever received, or the best real estate advice that you have to give?
Go big.
Love
It's
it.
easier. It's easier, man. It's easier. The bigger the deals, there's more money out there for bigger deals. Freaking, you can hire world-class management. You can have partners do the stuff that you don't like. The small stuff is just silly, man. Like, yeah, you can make money there, but like, if you really want to build real wealth and you really want freedom and time freedom, go big. You can do it. You can't do it on your own, but I'm telling you, you can begin to put a team of people around you to go do it. So go big. Go buy units. Units is the most important number in real estate. It is the multiplier effect, and it really does get easier the bigger you get. And I think I'm still telling myself that, right? Because I'm like, how big can we, like, let's go bigger. Like, are we still, is $40 million, is that too small? Like, is there easier money at $100 million? I don't know. So I'm constantly asking my team that, like, maybe we should look at some bigger deals. So that's the best advice.
What is the worst real estate advice you've ever received, or tell us about a mistake that you'd like to help other people avoid?
The worst advice or mistake I would have people avoid. I would also say, don't rush into things either, especially if you are partnering on deals. Especially if you're partnering, I think communication is so important. And I have probably rushed into some partnerships and deals in the past that, in hindsight, I regret, mostly because those are my headaches now, and those are the things that I worry about, and it really kind of is built. The issues are more around communication or a lack of urgency that that they don't have. And so, just make sure you're really vetting partnerships, relationships when you go into bigger deals, and make sure they, the communication plan is set and you're both comfortable with that. And make sure your level of urgency and their level of urgency is on par.
Name a book that's helped to forge you as a leader and as an entrepreneur.
Man, I would say the one that probably recently, if folks haven't read it, is Who Not How. It's a really good book written by Dan Sullivan, and great concept of, a lot, especially if you're an early entrepreneur, there's a lot of hows you got to figure out, and you may be tempted to try and go figure that out on your own. And what I've learned is, like, it's not you figuring it out. It's who do you got to go find to figure that out. So, we're trying to build a digital marketing strategy around our company. I'm never going to be the most sophisticated digital marketer on the planet. So I'd rather go hire that person. Is that going to cost me money in the short term? Yes. More so than it would if I went and did it? Yes. But over the long term, which is how I'm always thinking, it's going to make me a lot more money and give me back a lot more time. So who, not how.
Send us out with your favorite real estate or success quote.
Yeah. Gosh, I mean, I just go on my Instagram. I feel like I quote a lot of stuff. I mean, we started about network, man. This is, I feel like I say this one a lot. And it's so overplayed, but I think it's because it's so overplayed, it's so overlooked. Your network is your net worth. If anyone can leave here today, and if you want to figure out how the heck did this freaking college pastor get to a place where he can make a $40 million offer on a multifamily deal in the most competitive market in the country, it's because on that same call today, I had an equity fund with a guy who was Entrepreneur of the Year and has raised over $80 million over the last couple of years. And that was kind of what we needed to even be at this table. And the only reason I had that is because I've invested time and energy and money into building relationships with folks like that. And so it is the most important thing anyone can freaking focus on, is investing time and money, masterminds, conferences, events, mentorships, pay to get access to people. It will be the best investment you make.
And we just have to make sure we know how to contact you on the web. What's the best way to reach Ellis Hammond?
Honestly, if you want to reach me, like actually talk to me, Twitter's a great place. Like I feel like I spend a lot of time on Twitter. So if you're actually trying to get my attention, Twitter's a good place. But Symphony Capital Group is the name of our firm. If you're interested in working with us, we're looking for folks who can bring deals, who can raise capital, who want to invest capital. And so symphonycapitalgroup.com, please take a moment and go there. Like I said, or follow me on Twitter.
Well, Ellis, I have to say that I'm coming to you today, not from San Diego, but from unsunny Michigan. And I spent half of this interview hugging my humidifier. So I have to thank you for bringing the intensity today.
I loved it, man. I appreciate having me on, even though you weren't feeling well. You're the man.
All right. Thank you.